Good morning, everybody. It's the 18th of June 2018, and welcome to Rational Thinking. Today we will be covering our usual US dollar, sterling and euro currencies, more importantly with what happened last week and with what we can expect to see and happen this week. To start off with the US dollar, the main talking point was around the interest rate hike by the Federal Reserve. They moved their overnight lending rate from 1.75% to 2%, being the second interest rate hike this calendar year. Now, although that was very much widely expected, it didn't have massive ramifications in the market as it was fairly priced in, if you will. But more importantly, the bigger picture was that they said they are expecting more rate hikes this year, which could really, ramp things up in terms of what we're looking to see in terms of the other central banks potentially looking at raising their interest rates also. While we're on the same subject of the dollar, a big talking point was around Donald Trump. As always, he's always going to be a massive talking point for everybody. We had the G7 meetings at which Donald Trump and some of his advisors did say some somewhat outlandish things to the Canadian Prime Minister, but more importantly did impose a whole bunch of tariffs on Far Eastern imports. We also had Donald Trump meeting with Kim Jong-un in Singapore, which is huge. It's not something that we've seen in recent history, and those negotiations look to really sort of take place, and it's going to be very interesting to see how this pans out and what that means for global economics. So in regards to the euro, we saw the ECB chief meet last week. We'd always expected, and anybody that knows the ECB, we've had very many rumours, many opportunities, but not much has been delivered in terms of moving the asset purchase programme and the interest rate decisions. Last week, Mario Draghi, in effect, did actually cut their asset purchase programme from 30 billion a month to 15 billion a month, so by half, with a view to stop it completely at the end of this calendar year. Now, while that has been widely expected and has been anticipated for very many months, it wasn't necessarily perceived very well by the market because euro actually weakened off as opposed to strengthening as what you would have expected. More so, the reason why it weakened off is because the forward guidance into potential rate hikes was not what the market wanted it to be, and it was actually pretty poor, with the European Central Bank's overnight lending rate still at record lows. In terms of the pound itself, the pound actually had a pretty poor week. We started off with Theresa May proposing the Irish border situation to Europe. She was actually warned that if she proposed what she wanted to propose, Europe would reject it. But Theresa May, being Theresa May, proposed what she wanted anyway, and shock horror, Europe rejected it. We also had the vote in Parliament of whether MPs would get the decision to vote on what would happen with the Brexit deal that was published. That was actually quite a good success for Theresa May as it came out in her favour. In terms of data coming out of the UK, we've seen over the last few weeks, manufacturing data, construction data, it hadn't always been what we wanted it to be, and it was pretty negative. We actually had some pretty strong retail sales figures out earlier on this week. But as I said, with the unknown that is Brexit, and also the diminished UK rate hike potential, it's whatever upside we saw was very much capped off, and it didn't actually rally the pound as much as we would have liked it to into the higher levels we saw maybe 2 months ago. Nevertheless, in terms of this week, we don't have too much data out as such, but we do have Super Thursday. And for those of you that aren't in the know, Super Thursday is the day when the MPC or the Bank of England meet to discuss our monetary policy. It's not widely expected that they raise interest rates or cut our asset purchase programme, but it's going to be very, very closely watched to see what rhetoric is used to the degree of can we expect a UK rate hike maybe in the latter part of the year, and if so, by how much?